So, you're thinking about launching a limited company here in the UK? That's fantastic. But if you're planning on doing that in 2026, you gotta listen up because the entire rulebook is changing. In this quick guide, we're going to break down exactly what's new and how you can get your business off the ground the right way. You've got that brilliant idea, you've got the drive, and you're ready to make this thing official. Forming a limited company has always been a huge milestone, but for anyone looking ahead, the process is about to look very, very different. And I'm not exaggerating. The old way of doing things, it's gone. So if you're relying on some advice you read a few years ago, or maybe what a friend did to set up their company, you could run into some serious roadblocks, or even have your application flat out rejected. So, what's driving all this change? Well, it all comes down to this new piece of legislation, the Economic Crime and Corporate Transparency Act. It's a really big push to make UK business more transparent and, honestly, to crack down on fraud. Things like anonymous shell companies or those Phoenix companies that just keep rising from the ashes of old debt. Here's how we're going to break it all down for you. First, we'll look at the big picture, why this is all happening. Then, the really crucial part, the new rules you absolutely have to know. After that, I'll walk you through an updated step-by-step guide, and finally, we'll touch on what you need to think about after you're all set up. Sound good? Let's get into it. So, why this massive shakeup? Honestly, it boils down to one word: accountability. The government wants to know exactly who is behind every single company. This isn't just about creating more paperwork, it's about stopping illegal activity and ultimately building more trust in the UK economy. Okay, now for the most important part. Let's get right into the new rules themselves. These are the non-negotiables, the changes that are going to have the biggest impact on how you form your company from 2026 onwards. There are really three massive changes you need to get your head around. First, mandatory ID verification for everyone in charge. Second, get ready for higher government fees to get incorporated. And third, there are much stricter rules about your company's registered address. All right, let's tackle the biggest one first, this new ID verification requirement. This is a real game changer. You can no longer just type in the names of your directors and call it a day. Now, every single person with significant control has to digitally prove who they are directly with the government before you can even think about starting your application. And how does this happen? Through the gov.uk One Login service. Think of it like a digital passport check. Each director has to go through this process, and at the end, they get a unique verification code. You will need that code to move forward. No code, no company. The second big change, well, it's going to hit your wallet. The days of setting up a company for just a few quid are officially over. The government is raising its fees, partly to help pay for these new, more secure verification systems. You're now looking at an online incorporation fee somewhere between £50 and £100. That's a pretty big jump from what it used to be, so you'll definitely want to make sure you factor that right into your startup budget from day one. And the last major rule change has to do with your company's registered address. The whole point here is to make sure every company has a legitimate, traceable spot in the UK. So using those anonymous mail drop services, that's not going to fly anymore. From now on, you have to provide a real, physical UK address, a place where official mail can actually be delivered and received. As you can see, a generic PO box just won't cut it. And it's really important to remember, this address becomes public information on the company's house register for everyone to see. Okay, so you know the new rules, you know what the hurdles are. Now let's walk through the actual updated step-by-step process for getting your company launched in 2026. This is your practical roadmap to getting it done right. So look at step 1. This is the new and absolutely the most critical first step. Complete the ID verification for all directors and what are called PSCs. You have to do this before you do anything else. Before you pick a name, before you prep your documents, this comes first. Once you've got those verification codes, the rest of the process will feel a lot more familiar. Now, I've mentioned that term person with significant control, or PSC, a couple of times. So what does that actually mean? Well, it's pretty much anyone who has significant influence over the company. The most common example is someone who owns more than 25% of the shares or voting rights. But it could also be someone with the power to appoint or remove most of the directors. The bottom line is, all of these people need to be ID verified. You're also going to need 2 key documents. First, the Memorandum of Association. Don't let the name scare you. It's just a simple statement where all the first shareholders agree to form the company.
Second, you'll need the Articles of Association. Think of these as the official rulebook for how your company is going to be run. Honestly, for most new startups, the standard model articles that Companies House provides are perfectly fine.
And there you have it. You've navigated the new rules, filed everything correctly, and your company is officially registered. Congratulations! But as you know, that's not the end of the story. Now we've got to talk about the ongoing responsibilities you have as a company director. Yeah, getting your company set up is really just step one. Now the real work begins. You have to stay on top of all your legal and financial duties. And with these new regulations, there's even more to track. From filing your annual accounts on time to just making sure all your company's public info is always 100% accurate. And this is exactly where a great accountant can be your most valuable partner. As this chartered accountant puts it, their job is to handle all those nitty-gritty financial and regulatory details, which frees you up to focus on what you're actually good at, building and growing your business. So your company exists on paper. Now it's time to make it real. But have you thought about your tax strategy? What about your accounting systems? Your long-term financial goals? Seriously, the answers to these questions will be the difference between a business that just survives and one that truly thrives.